It's the start of February. Let's see what the data is showing us and what it means to you as a trader with Bob Mason of FX Empire. This is the Midweek Wrap. Hello, Bob, and thank you once again for joining us. Let's start with the economic calendars, if we may. We're halfway through the first week of February. Have there been any notable events in regards to the major currencies?
After some positive numbers out of the US in the early part of the week, the focus is now shifting to non-farm payrolls and wage growth due out on Friday. We saw PMI numbers improve, service sector activity improve, which is very important for the US economy. And on Wednesday, we saw ADP numbers deliver a whopping 291 increase in non-farm payrolls. So if we're looking at non-farm payrolls tomorrow, the government numbers, if they're anything near 200K sort of levels and December numbers hold steady, a jump in wage growth will really deliver a positive outlook for the US economy and the dollar. So expect the dollar to be on a tear should we see 200 levels for non-farm payrolls tomorrow. Wage growth are also positives. Trump's on schedule really for the start of his campaign. He's got off from the impeachment, and it's all systems go for a second term. Much will obviously depend on how the Democrats come forward, but it's all looking a bit rosy for Trump at the moment. That's market risk positive. So for the dollar, it's been bullish. Much will depend on the numbers tomorrow though, so they will have to deliver. Looking across at the euro, we saw private sector PMI numbers improve slightly in January, so that was positive. The numbers aren't particularly great though, so that really does reinforce ECB President Lagarde's outlook on the economy. Looking ahead, we've got EU economic forecasts due out today. Those will have a material impact really on the euro, as will the ECB economic bulletin, which is also out later on today. Looking ahead, we've got factory orders out of Germany today, and then tomorrow we've got trade data and industrial production figures out of Germany. How those numbers faring on the euro, the influence will largely depend on the ECB economic bulletin and the EU forecasts. If we see weak data and weak forecasts, that really could put some extra pressure on the euro that's back down to sub 110 levels against the dollar. For the pound, there's no stats out for the rest of the week. We saw economic data provide support and then Brexit sink. So we've got the pound back at sub 130. The lack of data will leave Brexit in focus through the remainder of the week. Let's face it, it's not going to be particularly easy for Johnson to deliver on a free trade agreement without strings attached. And if he is willing to go it alone and fall onto WTO terms, then that is considered negative for the pound. So currently, Brexit's negative for the pound. Economic data has impressed, but ultimately Brexit will overshadow any positive numbers near term.
It's been a busy start to the month, which should keep our traders and investors awake in this busy period. But in relation to the commodity currencies, what can we look out for there?
It's been a wild ride for the commodity currencies over the last couple of weeks. Obviously, we saw the effects of the coronavirus spread sink the commodity currencies last week. Aussie dollar, Kiwi dollar, positive territory so far this week. Economic data has been less than impressive out of Australia, however. We saw manufacturing index numbers slide, retail sales take a dive, and the trade surplus narrow. All in all, negatives. For the retail sales figures, however, while December was a dire number, for the quarter it was upward momentum and also upwards year on year. So that prevented an Aussie dollar slide this morning. Looking ahead, stats for the remainder of the week. We've got really no stats out of Australia, so the focus will be on the quarterly report of monetary policy from the RBA, which is due out tomorrow. Obviously, any negative sentiment towards growth, any dovish chatter, and expect the Aussie dollar to sink. We saw the RBA hold steady on interest rates on Tuesday, and that delivered an Aussie dollar boost back to 0.67 levels against the dollar. That was largely from the fact that the rate statement held back from talking of any rate cuts. If we see anything else in tomorrow's quarterly report, then obviously expect a reversal back to sub 67s. All in all, much will depend on how obviously the coronavirus impacts China's economy and demand. So obviously expect the Aussie dollar to remain under pressure in spite of this week's gains, which has been fairly decent considering the stats. For the Kiwi dollar, there's not been much to focus on. We saw employment figures earlier in the week deliver a mixed message. The unemployment rate fell to 4%, but that was largely because of a fall in participation rather than an actual increase in employment. Employment levels held steady in the fourth quarter compared to Q3. So Kiwi dollar, we got inflation expectations out of the New Zealand tomorrow. The Kiwi dollar could take a slide if those weakened further. Expectations have been for the RBNZ to stand pat, but when we're looking at the impact of the coronavirus on China's economy, then we could expect the Kiwi dollar to come under further pressure, particularly once the numbers start to reflect the negative impact that we're expecting. RBNZ could then be forced to make a move later in the year, which would be Kiwi negative. So that moves on to the loonie. Really, the big numbers are out tomorrow, IVPMI and the employment figures. Any weak numbers, and expect the loonie to sink further. The BOC left the door open for a rate cut, so these numbers are going to be particularly poignant for the loonie. Obviously, reliance on Chinese tourism, and that's quite a significant impact for the Canadian economy. So that's prevented any material upside for the loonie this week, which is in contrast to the Kiwi dollar and particularly the Aussie dollar.
And lastly, a subject we just can't escape, unfortunately, with the spread of the coronavirus now reaching peak levels. How is this affecting the Asian markets, especially the Chinese economy? How do you see this playing out over the next few days or so?
For the Chinese one, it's been a mixed bag this week. We've seen economic data out of China on the negative side. Private sector activity, we saw growth slow in January. That was largely expected, however, with the spread of the coronavirus and Chinese New Year. Really, the big focus is, however, how much impact the virus has on the Chinese economy and within the region. Expectations are quite negative, so we can expect some market forgiveness to relatively weak figures in the coming weeks. We got trade data out of China tomorrow. If they are particularly dire, expect risk aversion here, however. Markets are hoping for some sort of stability at least through January before the numbers begin to hit in February. The spread has continued, but we have heard of news of a possible treatment out of China that could dispel the spread of the virus further. Obviously, we're seeing the cases rise to 25,000 levels and the death toll break through to 500, which is quite significant. A containment, however, would be market positive, and then we would need to look to what lies ahead and how the Chinese government will deliver support for the economy. Looking at the Japanese yen, there's not been much to talk about. We've got household spending figures due out tomorrow. They're expected to slide again. Does that force the Bank of Japan to act? Probably not. They seem to be really unwilling to make a move despite of the ongoing promises. Really, focus is market risk for now for the Japanese yen. We saw 108 levels against the dollar, and it's back to 109s as risk aversion abated, and we saw the equity market rallies over the last couple of days. News-wise are going to be particularly key in the next couple of days, however, so expect some sensitivity to any adverse news on the virus and further spread.
Well, that's it for today. Thank you so much for joining us once again, Bob, and we will see you again next time. You have been watching the Midweek Wrap.